Hello, everyone. Welcome to Money Hour Radio, a show where we try to help you grow your money, cut your taxes, and have a very successful retirement. What could be better than that? I am one of your co-hosts, Ben Barzideh. I have my esteemed co-host, Matt Nadeau here.
Hey, everyone.
And hey, happy Thanksgiving week, everyone. I'm not here.
Yeah.
I'm on vacation in a sunny, warm place.
You're making me jealous, man. You're on vacation. I'm stuck here. I think snow is on its way this weekend. So hopefully you're not too tan when you get back.
Actually, you know what? Ever since I was a kid, I kind of feel weird about telling people I'm on vacation, because one time when I was a kid, we went on vacation and we actually had someone break into our house. So now that I've gotten older, I always feel like if I let people know I'm not home. But the good news is by the time this show airs, I'll be home.
That's right. You'll be safe and sound, ready if somebody tries to break in to the castle that is the Barzideh Plaza.
That's right. All right. Well, we are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm located right here in Barrington. And we are fiduciaries, and as an independent, family-owned firm, we truly have the freedom to focus solely on your interests, not some corporations or those shady private equity companies that are buying everything up these days. Our values and what we stand for is the polar opposite of them and their business model. And by the way, you should check out our segment titled How Private Equity is Ruining America. It's on our YouTube channel. It's excellent, and we'll let you know a lot more about how toxic private equity is and why you should not be doing business with them, allegedly, of course. Please like it and share it.
It's funny. I think I sent you a Facebook post where people were saying Jersey Mike's has went downhill since private equity took them over. So everybody
It's
rallying
terrible.
against private equity ruining all these great American businesses.
Last time I go there.
That's right. And of course, as always, want to say hi to all of our clients. Hope you had a wonderful Thanksgiving, having a great weekend. And, we appreciate you listening to us today. And we appreciate the trust you placed into us and want to let you know we love every one of you. And we have a great show today. There's a specific topic we really wanted to dive into and discuss, specifically about investment opportunities that are maybe part of the next phase of this AI revolution. Obviously, AI has taken over the economy, the markets, the internet, everything. What's next? What's the next phase? And then later in the show, a really important and timely topic as we're getting near the end of the year is Roth conversion strategies. Get them done before 2025 is over. You don't want to miss them.
And then before we start, we encourage you to subscribe to our YouTube channel on moneyhourradio.com, where you can view this week's episode along with the previous ones. Also, please subscribe to our weekly economic newsletter that's called the 5-Minute Market Brief. It's informative, succinct, and easy to read. And lastly, please follow us online at our BN Wealth social media pages on Facebook and Instagram.
All right, Ben, let's get into this topic. So what are these investment opportunities that might be part of the next phase of this AI revolution? And obviously, we've talked about it, but this AI enthusiasm has been a driving force behind this year's rally in the market, and really any of the rallies we've seen over the past couple years. But there are growing signs that the AI revolution is transitioning from a primarily chip-driven phenomenon to other corners of the tech world, and it's going to present opportunities for savvy investors. So the first wave of AI revolution was focused on the semiconductor manufacturer. Obviously, NVIDIA was the big one, but you've heard of other names like Broadcom, Taiwan Semiconductor, and others. And that's resulted in massive gains for those stocks, right? NVIDIA has gained more than 800% in 3 years. We've had, AVGO, Broadcom has rallied more than 400%. And Taiwan Semiconductors is up over 100% during that same period.
What a rally, right?
Crazy.
But as the AI revolution matures, we're actually seeing opportunities in other parts of tech, and specifically in sectors that support the adoption and integration of AI into various businesses. And specifically, while the first move in AI was chip-driven, the next wave in the AI revolution should benefit these 3 areas. First one is software and hardware manufacturers. The second one is power and utility companies. And the third one is cybersecurity companies. And there are numerous opportunities in those sectors to ride this second wave of the AI revolution. So let's start with software and hardware. We know that major tech companies will spend billions on chips to power this AI-based computers. But these computers will rely on advanced software to turn this massive computing power into practical applications for companies.
Yeah. And meanwhile, AI relies on data to learn and lots of it. I mean, we're got to store all of this different data for AI computers to learn. That is important in the application of AI into various business sectors. And the hardware producers that build and own several servers that can store all this data will be the big winners from this next phase of the AI revolution. And then obviously we got to turn next to electricity. And we've been discussing the surging demand for electricity to power all of these massive AI data centers and supercomputers. So utilities and boutique power producers are actually facing an unprecedented level of demand as the AI data centers join what was already growing demand for electricity to power electric cars and other technology. So while semiconductors we like to call the picks and the shovels of this AI gold rush, electricity would be that transportation medium that's powering the advancement of the practical applications for AI technology.
And then finally, as AI is adopted across industries, the need for more advanced cybersecurity will grow. And this was already a growth industry before the AI revolution. However, with more advanced computers come more advanced hacking techniques and threats. In cybersecurity, those firms stand to benefit substantially from this increased demand. And those are the next phases and opportunities in the AI revolution. But Matt, some people are maybe thinking, forget about the future. Let's bring it back to what's happening right now in the market and with AI, specifically this recent pullback and the growing concerns and worries about the profitability of AI and its sky-high valuations. And of course, that's something that we've been watching very closely over the last few weeks as it does impact the advance and protect strategy, which is the way we manage our tactical portfolios for our clients.
Yeah, it's kind of funny. People start getting nervous and panicking because it's been like a straight up swing since after the tariff panic. And that's not how the market always works, even in great bull markets.
No doubt.
So just this pullback isn't enough for us to panic and take our foot off the gas. We're still bullish. We're still heavily invested in equities. The difference between us and most other places, though, is we're monitoring our investments and our positions every single day. And if market conditions continue to deteriorate, we actually will do something about it. We'll get defensive by actually reducing our stock exposure, selling out of the stock market, and actually going heavier into bonds, maybe cash, while we just wait for signs of improvement. And we don't believe in just riding these market crashes all the way down to the bottom. There are times we will literally get 100% out of the stock market if we see conditions warrant it. We really do feel if you're in retirement, it is critical to have a sell strategy that's disciplined, not emotion based, on when to get out of stocks and protect your money if risks get too high.
Well, contrast that to the buy and hold strategy, just to ride it out concept, which is how the vast majority of people have their money managed, of course. Well, that approach is actually based on something called modern portfolio theory, which we joke about how it's kind of like an oxymoron, since it has the word modern in it, and it came out in the 1950s, which, Matt, as you say, that's before the what came out?
The hula hoop was invented after that.
There you go. But it basically recommends that you diversify into just a bunch of various asset classes and investments, and you just ride things out. No matter how good the market's doing or how bad it's doing, you just sit tight and don't make any changes. And jokingly, we also sometimes call that the buy and hope strategy, because you just blindly buy into a bunch of different areas and hope things go up. And if things go down, you hope it doesn't go down too far or that it lasts too long before it starts going back up. And while hope is a virtue, it's not a good investment strategy all on its own.
Yeah, and most people don't have a defensive plan other than this diversified buy and hope. And so do you out there have a defensive plan to help protect your money from a potential market crash? Most people say no. So if this investment philosophy interests you, it resonates with you, and you're looking to have your money managed like that, reach out to us. We'd love to sit down, schedule a complimentary consultation. We'll go over your current financial situation, your goals. If we can help, that's great. If we can't, that's okay too. We'll still part as friends, but we would love a chance to go over this in more detail with you. Please give us a call at 847-780-2980 or go to bnwealth.com. All right, don't go away. When we come back, we're going to talk about Roth conversions. Welcome back. Thank you for tuning in. This is Money Hour Radio, a show where we try and help you grow your money, pay less taxes, and of course, have a beautiful retirement. What's better than that? Now, I'm one of your co-hosts, Matt Nadeau. I've got with me my sidekick, my other host who's relaxing in the hot sun in Florida, Ben Barzideh.
Hello, everyone.
All right. We're both founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm. We're located here in Barrington. We're independent, we're local, and we serve the greater Chicagoland area.
And we have a very simple motto. It's do great work, have fun, and give back. And it's important for us to help try and enrich our local community. And why we started the charitable arm of our company called BN Giving, a way for us to invest in your purpose with you. How it works is if you become one of our clients and you're a faithful tither or a regular giver to a qualified 501c3, just let us know. Each year, we will match your donation up to 10% of the management fee that you pay us. And as our firm grows, so does our collective impact. Isn't that just such a neat idea and a concept?
Yeah, I mean, it's totally unique to our firm. I don't know anybody else who's doing anything like it. And, one of the things that we put out there just to help you if you're listening is a fantastic 10-minute video. And it's on our YouTube page. Just go to moneyhourradio.com. You can see our YouTube page. And one of the ones that we really want you to take a look at is something titled The 6 Best Ways to Give to a Church or Charity. And it is a fantastic way to see opportunities to give in a better way that benefits you and the church or charity. And if you're out there and you're part of a church or another charitable organization, take the time to watch it. And if you want to learn more, reach out. We'd love to connect. Our team will actually offer complimentary educational options on tax efficient giving and strategies to really help maximize the tax donations for your donors. And while the church or charity actually will receive oftentimes more money than it otherwise would. And if you're not a regular giver, that's okay too. We understand not everybody is. We'd still be honored to work with you. But if you're interested in learning more about joining our BN Giving community and want to learn more about potentially becoming a client, just reach out, go online to bnwealth.com, or you can call us at 847-780-2980.
All right, let's now talk about our next segment titled Crunch Time. Get your Roth conversions done for 2025 before it is too late. And if you're thinking about doing a Roth conversion this year, you need to get on that right away because you only have about 2 more weeks to get it done. Even though you have till the end of the year, the reality is most custodians and broker-dealers have a deadline of about mid-December to get those submitted in order to get them processed by year end. And if you try to do it last minute, it most likely won't get done. And this year might provide more benefits than prior years for Roth conversions, as the standard deduction has been increased and big time for seniors, which means you have more room to convert before going into the next tax bracket.
Yeah, I mean, one of the most significant outcomes from the One Big Beautiful Bill Act was the permanent extension of these lower individual tax brackets. That was first introduced back in 2017, the original Tax Cuts and Jobs Act. And this is especially important for middle and upper middle income earners. So including many federal employees, many retirees who will often fall anywhere in between the 12, 22, or 24% marginal brackets. And again, the 22% bracket and the 24% marginal bracket, if you're a joint filer, that is income that ranges from around $100,000 all the way up to $400,000. That's a huge chunk. Now, single filers, you're about half of that. But what we'll often see is in retirement, it's actually easy for a couple to not only be in these brackets, but be in the lower 12% bracket and have comfortable level of income, because the 12% bracket right now goes all the way up to almost $97,000 of taxable income. meaning it's after these big deductions you were just talking about, Ben.
And we're going to get back in a minute to how the standard deduction went up a lot and how that will help you with getting more done in a Roth conversion. But here are some key potential opportunities for a retiree to take advantage of, especially in the form of what we call partial or micro Roth conversions. And if done right over the course of a few years, one may be able to completely convert their pre-tax IRA to a tax-free Roth IRA while controlling and minimizing the tax hit. So let's look at an example. Bob and Mary are over the age of 65 and they're retired. For income, they rely on their Social Security benefits and a pension that Bob has. And combined, that's about $86,700 a year of income.
Yeah. Now, because they are over age 65, and due to increases and some temporary provisions in the standard deduction, that adds this additional feature that's starting this year of $6,000 per person, or $12,000 for the married couple. Add that all together, the standard deduction for them is actually going to be $46,700 this year. It's massive.
Insane.
And that actually means that they're going to have about $40,000 only of taxable income, and that puts them well within the 12% bracket. Remember, the 12% bracket goes from about $24,000 up to about $97,000 of taxable income. So in reality, they can add about another $50,000 of taxable income and still stay in the 12% bracket. So this might be a golden opportunity to do $50,000 worth of Roth conversions in this year in our example. Now they're going to owe some taxes. It's a 12% tax bracket due to that conversion. But inside the Roth IRA, it will then grow tax-free. It'll come out tax-free later in retirement. It also works to help reduce, for example, RMDs in the future. So all of these tax benefits, it really can help you going into higher tax brackets later in retirement.
And in our example, we talked about just one Roth conversion for this year, but this strategy repeated over time, done over a few years, can be powerful. And like we just mentioned, if done right, someone may be able to convert maybe their entire pre-tax IRA or a big chunk of it to a Roth IRA over the course of a few years while minimizing the tax hit. And that can help, like you said, Matt, keep them down in case they go into a higher tax bracket later in life. Or actually, it'll help maybe keep them in a lower bracket to make sure they don't go into that higher tax bracket. But always with any tax or estate planning strategy, it's so essential to work with a qualified professional who understands these concepts and can tailor them to your unique situation. And usually a good financial planner like us, we're kind of the quarterback of the plan. And we help coordinate with your other professionals like your attorney or CPA.
And I want to throw a few caveats out here. We did a really basic, simple example there for this Roth conversion. And it's usually not quite that simple where if you think, well, I'll just do it. You really have to be careful. I have a client family that I'm working with that are very similar in that situation. However, when we take into account your Social Security taxation does change based off of how much other income you have. So in an example where sometimes you think you're only paying 12 cents on the dollar to do a Roth conversion, if that conversion causes your Social Security tax to spike and go up, what you'll often find is that you're paying closer to 20 to 25 cents on the dollar for some of those Roth conversions because of the impact to Social Security. So, Ben, you got to really be careful that you're not doing this on your own. That's just one potential tax landmine you got to be careful about.
No doubt. And even if you're trying to maximize 22% bracket or maybe something higher than that, what you have to worry about is IRMAA. So if you're receiving Medicare, if you're on Medicare, what happens is your Part B and Part D premiums, those are income-based. And if you have above a certain amount of income, they start charging you a lot more for those premiums. And it can be to the tune of thousands of dollars a year. And so what you have to remember is, like for a joint filer, for this year, your adjusted gross income, once you get towards that $212,000 range or so for this year, anything over that is going to get you into that next bracket where you pay higher Medicare premiums with your IRMAA. So those are things you need to be aware of. We've talked about taxable income, but there's other thresholds that are based on adjusted gross income, which is before your deductions. So you really need to work with someone that knows what they're doing.
Yeah, and that trips people up, that adjusted gross income versus taxable income.
No doubt.
Listen, you just need a specialist, and if you're in need of a knowledgeable financial planner, someone who'll put your interests first, who knows this kind of stuff, we'd be honored if you gave us an opportunity to talk with you. Again, if our investment and our financial planning philosophy resonates with you, please reach out. We would love to do a complimentary consultation. What we'll do is we'll go over your personal financial situation and your goals. We'll provide you with a financial checkup and analyze your insurance, your taxes, your estate plan, your investments. Things look good, you'll get some peace of mind. And if there are holes, at least you'll know there are areas you want to fix. And many people have never had someone look at all of these financial areas in their life at one time. And if we can help, that's great. If not, we understand. We'd still part friends. To explore becoming a client, reach out to us online at bnwealth.com or call our office at 847-780-2980. And of course, we'd encourage you to sign up for our weekly economic newsletter called the 5-Minute Weekly Market Brief. Again, go to bnwealth.com to sign up for that. Anyway, we're out of time. God bless. Happy Thanksgiving, and we'll see you next week.
Bye, everyone.